Hello YouTube, welcome to our channel again. So today we'll be looking at the market analysis for upcoming week, starting with fundamental analysis. Like next week Monday, there is not much news that's more impactful. We'll start seeing news that are impactful from Tuesday the 5th until Friday the 8th. So on Monday, normally I don't trade because there is a Monday effect where the price normally at a low volatility, and I'm looking at analyzing the market and looking at direction of the market. So Tuesday should be telling me where is the market going. All right, fundamental, it is the most important trend setting direction for me in order to look at the position, which position I will be adding or which position I will be downsizing, or which entry point that I'll be looking for at what time. All right, so this is what tells me if I'm going bullish or bearish within the time of the week. All right, starting from Tuesday, the Tuesday, March of the 5th, 2024, we'll be seeing Savings PMI in US, United States of America. Looking at the previous data, the manufacturing PMI, it came negative. I do not expect anything less than service PMI to come negative this week. If it comes negative below the previous percentage, which is 53.4%, and I'll be looking at starting to short the dollar within the week because we set the sentiment on Wednesday, which is the 6th, where Fed chairperson Jerome Powell will be giving testimony, and this testimony I think will be around the hawkish in order to assist um, the inflation fighting tools that they have been employing throughout. I do not see any words that will be in his testament who were indicating any um, improvement rather than remaining hawkish towards the dollar. All right. On the same day, on Wednesday, we were looking at JOLTS jobs openings. These JOLTS openings, they normally set for the upcoming NFP. So, right, looking at the service PMI and manufacturing PMI from previous week, and looking at the job openings, I assess that will be coming up also negative at the consensus of 8.95 million. Probably that will be the number around that, uh, a number around that consensus. All right, so that would be also setting the tone if the Fed chairperson Powell will be carrying on with hawkish stance on Thursday. I think if the numbers comes out negative, negative, then that means the Fed is employing the right tools in order to fight the inflation. All right, not forgetting on Thursday that we have ECB interest rate decision. I think the decision will remain the same. There will be no changes on interest rate. Why am I saying that? Because looking at the past couple of weeks, the dollar index is been correcting, and that's the sign that the interest rate that sitting at 4.5% is sufficient for now. But however, their stance will be also more hawkish because the inflation, they are not happy with the numbers of the inflation currently. But however, I think there will be no change in the interest rate, which will be signaling the um a neutral position. I'm just gonna look at the fundamental based on the short position. Looking at intraday trading, I'll be more neutral, but are looking at what is the trend of the day, and then I'll trade according to technicals. That's anything against the euro on Thursday. Right. Moving to Friday, toward the end of the week on the 8th, we will have a non-farm payroll and unemployment rate. So I think the unemployment rate will be just above 3.7%. And if they just above 3.7%, we'll start looking at US dollar, also indicating the bullish correction, the bearish side, because that means the Fed is willing to fight the spiking economical condition, as the previous week on Wednesday, the 28th of February, the GDP numbers rates quarter over quarter estimate came out at below the market consensus and forecast at 3.2%, which was less than previous GDP growth rate quarter over quarter, which was sitting at 4.9%. So that shows that the economy, the US economy, is slowing down, and that's slowing down of economy and also affect the employment rate vis-a-vis at the unemployment rate. So I expect no less than the negative stance for the next week. So anything against the dollar, I'll be shorting. And if I'm looking at the commodities, um, and things they go according to my plan and my consensus, of course referencing other sources that I have read throughout the week. I'm looking at shorting the USD, and I'm also looking at longing the Nasdaq. I'm looking at longing anything US30 and also stock market. All right. Moving on to technical analysis, starting with USD Japanese yen. All right. First of all, I need to look at my price ceiling and my price floor. Once I establish my price ceiling and price floor, and then I'll get my Fibonacci extension and my fib zone, and those level will tell me exactly what the price entry price for long and for short will be roughly at. All right, and so is the other things. Okay, let's carry on with USD Japanese yen. All right, first of all, I can see that my price ceilings, I have two price ceilings that have been established. From here, my first price ceiling, my price ceiling here, and I have another price ceiling here, and I have my price floor here. All right. The another price floor that is somewhere here is having established because this pair is still going to the bearish direction, which what I expected based on fundamental analysis, that the shift is towards the downside. All right, carrying on. So the next thing I'll be using my fibs zone in order to establish which is the better position to enter, or where is the dollar starting to turn the momentum. All right, starting here. So as you can see, the dollar, I think, will start turning somewhere this fib zone. All right. Once it reaches this fib zone, I think the dollar will start turning here. So as you can see, there's a lot of still downward momentum to this level here. All right. At the first one, then I'll be looking for the next one. Where are my expansion zone, construction zone, and equilibrium zone? All right. So from here, to here. All right, as you can see, this is my construction zone. This is my expansion zone. On expansion zone, that means if the price is sitting somewhere here based on price flow and previous price flow and price ceiling, that means when it's sitting on expansion, then the pair is bullish. And if it's sitting on construction or below construction, that means the price is bearish, and it might turn if it's outside the price construction. All right, moving on. So the next thing that I'll be looking for is dumping and collecting zone. All right, so I can see from this previous side that this will be my dumping zone. So this is dumping zone for this pair. And if I'm looking for collecting zone for this pair, however, looking at the movement of the price here, the collecting zone has not been established. So the next thing I'm looking for, it will be the price clutter. Price clutter is the area where most of retail traders, they place their stop losses and entry position or limit market execution position, and that's where most of the people, they use the normal technical analysis that everyone use: trend lines, key zone, and supply and resistance zone. That's where normally my a price clutter, and that's where the smart money hedge fund, they look for sweeping the area or with their strong long position or short position. All right, so carrying on, if you can see from here to there, from here to there, that's my price clutter already established there, as you can see. And if you go further from previous price action, there's another price clutter which was never broken. As you can see, the money, smart money, have pushed the price further up in order to establish this price clutter. All right, and to the downside, as you can see, for the past weeks, that there was a price clutter that established somewhere here. This is my price clutter established. So, okay. So what am I looking for next for entry points? So for entry point, I am looking for depression and appreciation zone. So appreciation zone is the areas where I think the price, it's either have been reached as areas to signal for me that we are going in a downtrend. And if those areas have been broken, that means the price is going to the downside. Of course, if those areas align with my fundamental analysis, which is my trend, okay, then I'll start looking at entering the position. Okay, moving on. Where are my depression and appreciation zone? So starting with appreciation zone. First appreciation zone that I have established here. That's my appreciation zone. Correction, that's my appreciation zone. That's when I want to go long. I'll be starting looking for long. And it makes sense. It's just below the price cluster. Like I said, this price cluster is the area where the smart money is looking for taking the retail position, because where the retail position they normally be. Okay, so once we reach here, and hopefully the smart money will not be looking at establishing the price clutter, a further price clutter, meaning it will break this price clutter and go to the downward direction, because normally that's what the price do sometimes. All right, so hopefully they will break out the price clutter and carry on with a up trending market. So my first position, I just put 5 pips above 10 pips or 5 pips above the appreciation level. If I had to go long, but the fundamental, they indicating the dollar that it might go short, but however the fundamental changes based on um, political information that comes out through the week, or military information that come out through the week, based on whatever that is happening around the world in terms of wars and battles that are taking place around the world. So it might change the direction and influence the price movement. So that's why I'm always not only looking at the fundamental, also I'm looking at the price, that there's a possibility that it might change direction. Okay, and I'll be looking for 1:2 or 1:2.5. So if I were go long based on the fundamental, and looking at my current fundamental, as I can see here, already the price have reached the price depression. All right, as you can see, 1, 2, 3, 4, 5, already 5 hours from before the market closed on Friday. The market have indicated that it might be going in the downward direction, which is bearish movement as per my fundamental analysis. All right, so for next week, I'll be looking at shorting this pair. By now, I should have already short the pair and will be looking like this. And I know since the price went up and formed price clutter, and I think the smart money, because of fundamentals that are happening this week, and interest rates and inflation, they'll be looking at establishing more price clutter. So as the data comes in indicating a downtrend on the dollar, a weaker dollar, then most of retail traders, when the numbers are released, they'll be looking for a shorting position, and that's where they normally look for shorting position around these areas that will be established as clutter area as the dollar moves to the downside. And that's where the smart money, they will be looking at reversing the dollar to the upside. All right, so this is what I'm looking for, and I'll put my stop loss above the dumping zone. All right, because that's more normally safe, and I'll put at my position 10 picks below the depression zone. Okay, so this is what I'm looking for, any trade to the downside. All right, that is USD Japanese yen. Moving forward to pound yen. All right, pound yen again. Like I said, we start by establishing our current price floor and price ceilings, and then we move on with technical analysis. As I can said earlier on, while I was looking at the fundamental, looking at British pound is more stronger than Japanese yen, but with previous economical data, it shows that there's a slowdown in Great Britain and also in United States economy. So Normally, what smart money does in terms of fundamental, once they see the shift, they move to yen, because yen is also regarded as the safe haven currency. And you can see the smart money, they knew before the data was released last week that there is a shift in the market, and you can see from the 29 until March the 1st, the trend started correcting to the upward. So I expect the trend to continue correcting to the upward depending on fundamental release for next week. But for now, I am looking at British pound, Japanese yen to a bullish direction. Right, starting with price ceiling and price flow. So yeah, so this was our previous price ceiling, and this was our previous price ceiling, and this our previous ceiling, the previous floor, and this was previous flow. Right. Now you have price ceiling and price flow being established. So what next are we looking for? We're looking for our Fibonacci extension or retracement. All right. So past we had price ceiling and price flow, and the price is in the middle of two. So I'm looking for is the movement of the price and see my Fibonacci level. So as you can see, the price went down, up, started correcting. Then, like I said, based on fundamental analysis, I'm looking at British pound to be on the downside. As you can see, it's sitting on, it went to important Fibonacci zone, which is 0.618, and it turned from there, indicating the critical correction point to the downside. All right. So as you can see, read from here, as was the perfect entry from the last week, targeting the highest 2.5%. All right. So carrying on with my technical analysis. So the next thing that I'm looking for, it is price expansion, contraction, and equilibrium. So going back here, entering my fibs. So as you can see, again, the price is sitting at construction area. Construction area is indicating a downward moving a pair or a bearish movement. All right, it's to the downside. Okay, so already all the confluences they indicating that this British yen, British pound, Japanese yen is to the downside. Okay, so the next thing what I am looking for is the collecting and a dumping zone. All right, here above the highest PC, I can see there is a dumping zone, and if I go through the above PC, And the second PC I am observing, sorry about that, delete, somewhere in this position here. Move it a little bit, and it makes sense why the price started turning there, because that was a price clutter. That was a price clutter. As you can see, the price went above and start taking all the stop losses that was initiated in this position, which was based on this level here, taken and went down. All right, so that's the price clutter there. And I observe another price clutter somewhere here. So, like I said, as the price movement is to the downside based on the fundamentals. So I'm looking at the price maybe reaching even somewhere above here, not taking this price clutter, but establishing another price clutter somewhere here. So more retail traders will be putting their position and using this price clutter as their stop loss. Okay, so with most of the retail traders, that's how they trade. So the next thing is for me to look for dumping zone and collecting zone. Okay, my first dumping zone, like I said, it's up there. Dumping zone is somewhere there. Then for my entries, I start looking at um, depression and appreciation levels. So appreciation level one, I see the appreciation level up here. So that's where I will start looking at entering bullish if the fundamentals change based on economical condition and also the political influences. Okay, and I'll put it 5 to 10 pips above appreciation zone and putting my stop loss just close enough to the price clutter, because sometimes the price will go up, come down, create another, shift this price clutter to the upper level. So give the retail trader another hope that the price might be correcting and moving towards upward direction. What does that do? So normally that gives the retail trader something like this, and everyone else knows that once the price started moving like this, so the next thing for a price is to come down, to go up, come down to this level, and from this level go up to up a direction based on this trend line or this channel, whatever they call it. All right, so if it goes to the upside, I'm looking for 1:1 2.5. That's there would be my target for the upside. And for the downside, like I said, that was the first possible position that you could have entered. And my next position that I'm looking for is somewhere here, which is the depreciation level. This is the depreciation level, and I'll be looking at shorting once the price reach here. And my stop loss, I could put it up here and look for 1:1, 1:1.5 in order to be safe. or I can go down to 15-minute time frame and look where I'm a lower time frame depreciation appreciation level, and then I'll enter that. Yeah, but on Monday I'll be looking for 15-minute time frame to see where I will be putting my stop loss. Because normally when I go to 15-minute time frame, that I have a clear entry and clear price clutter within a lower time frame. But for now, this is what I'm looking for. All right. So moving on to commodities, as you can see that Nikkei 225, it's also established the highest point since back in the days. Okay, today have reached the highest point and look like it's uptrending based on the dovish um, dovish stance with Japanese bank. So I think they'll remain at a negative outlook and on increasing the interest rates, which normally that boost the Nikkei. All right. So again, based on those fundamental, I'll also be looking at it's either because there's a higher spot, is either the Nikkei will be starting to reverse a little bit in order to catch a breath of this momentum movement to the upside, and I'll be looking at either longing or shorting based on US economical data and the US effect, John Powell testimony, words that he will be using. If he still remain hawkish, I'll be looking at shorting the Nikkei, or if he look at starting using the words of better a job data that has been um, indicated earlier in the week, or around the sentiment of negative GDP numbers or a less slower growth numbers, using those words and looking at earlier tightening of interest rate, then I'll be starting to look at the upward position. But if it goes hawkish and remain hawkish and is not looking at earlier tightening of interest rate, then I'll be looking at a dovish approach, and that will be bearish approach. All right. Without further ado, I will be first establishing my price ceiling and price floors. All right. This is my price ceiling here, previous price ceiling, and this is my previous floor. And this previous ceiling is not established yet because it's only just two candlestick that looks, or one candlestick that looks bearish. But however, we can start opening the Asian market and start moving to the upside, meaning that the price flow have been established. All right. So going back, looking at my price ceiling, as a price ceiling somewhere here. Here's my price ceiling, and excuse me, that's my price ceiling here, and this is my price flow. So right, as you can see, we have price ceiling, price flow, and breakdown above the price ceiling, the price. All right. So next thing is for me to look for extension. So price went here, there, and there. As you can see, the price have overextended from all the levels of Fibonacci's. All right. And even if I do it vice versa from here, 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 the price, the possibilities of the price to move to the up direction is still immense. Look at this. So there's a possibility that the price can move up until this level, somewhere here, there. Then you start looking at a down trending market. So to the upside, positive; to the downside, also possible trade. All right. So next thing, I establish my price ceiling and price floor. I'll be looking at the expansion and construction and equilibrium zone. That's my price ceiling, that's my price floor, and the market is above the price expansion zone, meaning that it's bullish. Okay, still bullish. My confluence is there. Then the next thing, I'll be looking for dumping and collecting zone. All right. So my dumping and collecting zone and this trend in this trend is currently okay. Currently there's no dumping and collecting zone. All right. So the next thing is to look for price clutter. So I can see if I go somewhere the 23rd of Feb, there was a price clutter that was established somewhere there. Here is my price clutter that I'm looking for. And there is another price clutter that I am looking for. All right. So next thing is to look for appreciation and depreciation level, where I'm looking for my entry level. Um, from here to here, that is my depreciation level. And if price start entering here, it might create this level another price clutter, or correct into this price clutter here, and I'll be looking for 1:2 trade. Or if it's carrying on to the upward movement and I have my price appreciation in this level and 10 pips above this level, I'll be looking for 10 pips above this level. I'll be looking for entry, and my target will be somewhere there. That might take a month, 2 weeks, but for intraday, I'll be looking for 1:2.5. As I hate to hold trades overnight. So here we go. This is what I'll be looking for. Already the price is at my level here, and if there's a signal of a candle going to the upward position, I'll be looking for entry. And if it goes to 1:1 for money management, I normally take the break even and shift my stop loss to break even. And then when it goes to 2:5, well, 1:2.5, then I close the trade. But if it return, I know that I'm breaking even. Okay, and I only uh, risk 1% of my overall account for each and every trade. All right, moving on to gold. Right, gold, as you can see, based on economical data. That's the GDP. United States GDP is slowing down, and the manufacturing PMI is also showing a bearish sentiment, and also I'm expecting the service PMI to show a bearish sentiment, and the Jerome Powell, I think he will start using the lighter weight when it comes to hawkish stance. All right. So, further ado, let's carry on with our technical. So, first of all, price floor and price ceiling. So, price ceiling, first price ceiling here, and price ceiling, the other one somewhere here, price ceiling, and price floor there, price floor, price flow. And last one, price flow. Right. Next thing, since my price ceiling and price flow, when the price is not in the middle of price ceiling and price flow, I use my Fibonacci extension. So price flow, price ceiling, price flow. Price, it might be turning because it in the key zone of 1.618, or it might carry on and goes to the price of a level of 2.618. All right, so it's either the price will reach here, will carry on, and from there and carry on there, first possibility, or since it's between these two key level, it might looking at going to the downside to correct. All right, let's leave it there for now. See if confluences that will be shifting this price action. Okay, so since we have established our price ceiling and price flow, we're moving at price extension, correction, price expansion, construction, equilibrium. Right, price expansion and equilibrium. So here, as you can see again, price ceiling, price flow, and went up, having established another price ceiling and price flow. So the price still indicating bullish. Okay, so another confluence bullish, and then I'll be looking for price clutter. So going back, you can see that the price clutter here, price clutter there, and there's another price clutter here, which is already established, price clutter here, and there is another price clutter here. So you can see there's a lot of price clusters that are established to the downside. And to the downside also, For the first time today, I have observed the collecting zone. So seeing the collecting zone somewhere here between the price clusters, there's my collecting zone. And the next thing, oh, this was a lovely trade. This was the lovely trade. So here, here, when was this? Friday, already the price have reached the appreciation level. This was amazing trade. Appreciation level makes sense. That was going to be my entry on Friday, and looking for one is to somewhere here, stop loss. Looking for one is to 2.5. Boom, 100%. You can see. And the price flow was going to be somewhere here. This was going to be my price flow. Somewhere here will be my price. Sorry, not the price flow. This was the price depreciation. As you can see, price depreciation was not broken on Friday. So if I was looking for short, I was looking for this position, and it makes perfect sense. You know why? Because this is where most of retail traders, the price could have went down, take all the stop losses, create another price cluster, and move up below, create a price cluster below this one, and move up to the bullish direction. So for gold, I'll be looking for maybe for gold to start creating price appreciation and some price clutter to the upside, and maybe correcting to the downside, and looking for the long position once I observe my price appreciation. In the opposite direction, it might come down here and create a, a depreciation level, and once the depreciation level is created, I'll be looking for downside, looking for gold to take this price clutter some here down this direction. All right, so this is what I'll be looking for next week. But for a bonus pair, I'll also do the USD South African rand. So that's how I'll do that for bonus. If one of you are interested for me to analyze also USD South African rand, please drop the comment below and subscribe for further uh, market analysis for next week. Thank you so much, and enjoy the rest of next week. Let's trade, let's make money. Let's go.